Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Multi Rosewal studios. I'm Prashant. Friday morning, last session of the week as we go into the weekend. With me, my colleagues Nigel and Rima. Guys, morning.
Hi, morning.
Hi, good morning. So we've been wedged in a very tight trading band this whole week. It's been about 25,350 on the way down to 25,650 on the way up. But so many dramatic stories to talk about, right? Whether it's AI job losses, what's happening in global media, AI, the match.
Well, that's right. The match top of mind, right? For me, I mean, we're still alive and kicking. By Monday morning, we'll know whether we make it to the next round or not. And, I think on the geopolitical front, at least, there appears that things are at least cooling off. So that worry is a little bit behind.
It looked like flip-flop last night, right? Oil prices were up 3, then they fell. And looks like more talks, basically, on some of the... And I think this seems like we're closest now to we've ever been with regards to US-Iran. If it goes somewhere or not, we don't know. But that's the hope. Well, let's just take it from the top, right? I mean, so US equities were lower and on large-cap technology. S&P was down 0.5%. NASDAQ was down about 1.25% or so. And, the semiconductor stocks, which is your NVIDIA and a bunch of other names, were all lower. NVIDIA, by the way, was down 5.5%. It had reported numbers the day prior. And numbers were good. Commentary was good. The Jensen Huang's interview to CNBC, he kind of said that the AI capex cycle is here and here to stay in that sense. But the stock ended 5.5% lower. And that was not just NVIDIA, but a bunch of other names as well. And the contrast was quite amazing. So while the hardware and the semiconductor stocks all sold off a little bit, varying degrees, the application stocks, which is the software companies, which had all been sold into, they rallied. I think that contrast is perhaps the most severe it has been last night, I think in at least a year and a half or so. I mean, the relative outperformance to underperformance of the semiconductor stocks and the software stocks. So there you go on your screen. Infosys was up about 3%. Wipro was up about 2.2%. And the others, right? Globant 5%, Accenture 8%, Cognizant was up 8%, and EPAM was up 6% or so as well. By the way, I think Globant reported numbers last night, and there has been some commentary from the company. We can go into the details a little later. But for now, I think this is just to unwind on both sides. It's been one way up for the semiconductor stocks, one way down for the software stocks, and it's a bit of a reversal in that sense. I mean, I think maybe some of the pressure we've seen in Indian IT services also comes off. I mean, maybe small bounces, small recoveries. We'll see how this one goes. But it's not as if suddenly, we are presented with some dramatically new information which will change markets' thinking on software in that sense. It's still an evolving debate rather than, a big discovery, a eureka moment which turns the trajectory for all these names on the upside. So mind that. But in a tactical kind of environment, in a trading kind of setup, I mean, I think these moves can be meaningful after sharp one-way rallies and sell-offs that we've seen on both ends. Now, the macro markets, 10-year yield was down 5 basis points to about 4%. Oil prices, absolutely little change, 71. But behind that unchanged $71 on Brent, you had first a 3% rally because there were reports that the US-Iran talks are not going anywhere. There's a deadlock. And then there were signs of progress between US and Iran. And then news came that talks will continue next week as well. And we've also heard from the foreign minister of Iran, who's essentially said that talks now focus on some specific technical areas, which the markets kind of sort of, understood as he's saying that this has now reached a stage where you're talking very, very specifics, and some of the bigger, broader directional view is now aligned. So we'll see how this one goes. More talks next week is how this is set up. Now, gold near 52, just under $52. There's gold futures. And silver is just under $90 odd, so not very much by way of change. Now, I'll just tie in the levels here and the trading action. It's been painful. So no follow-through on the upside, one day up, one day down, but no follow-through on the on up day +1, no follow-through on the down day +1. So, and that's the reason why I'm saying it's been painful for both bulls and bears and those who are trying to get it right in either direction. And by the way, the trading channel that we put out, and we put that out for almost a week and a half now, that remains. That's the bigger channel in that sense, but that also has narrowed. So there's a channel within the channel, and the very near term, very, very immediate setups, because the range has become so tight, I'm just kind of sort of compressing levels on both the upside and the downside. So 25,570 is the resistance on the upside, and 25,275 is the support on the downside. Because if you look at consider the wider levels, I mean, then you're looking at 25,700 kind of levels on the upside and about 25,100 on the downside. But that's a slightly wider band. This is the more immediate levels that the market's got to take out and give a direction. Remember, I mean, the point is in the very near term, what we've had price action-wise is lower highs and lower bottoms. So that lower highs and lower lows, and that usually typically signifies perhaps a little bit more weakness. But the point is, on down days, there is no follow-through. So you've got to be open to the idea that perhaps the market doesn't want to fall and it wants to bounce from here. So keep that in mind as we go through this Friday. GIFT Nifty will give you a quick sense of how we're likely to start, and we'll pick it up from there. So yeah, there you go. 90 points down as the indicative open as far as the GIFT Nifty is concerned. Nigel has walked across to the wall with the F&O setup. Nigel?
Well, hopefully that GIFT Nifty soft start that you're talking about, Prashant, doesn't turn into something like an ugly trading session, because a 100-point downtick and maybe, in fact, seeing some kind of basing out around those levels will be on the bulls wish list. Now, in yesterday's trading session, the flows were actually mixed, but going by the high gross volumes, the FI flows could have been impacted by some large trades, some rebalancing, or maybe an element of weekly expiry as well, because yesterday the FIs, they turned actually sellers. For February, though, the big takeaway is that the FIs appear to be leading more in than out. And I think that's positive itself, because they have been selling lock, stock and barrel. Not too much movement on index futures, though, from the FIs. They added some mild longs. They continue to remain net short with close on 78% of their positions on the short side. On the stock futures, the FIs added equivalent amount of longs as well as shorts. But moving to the index options, well, yesterday's trading session, they were writing more calls than puts. In the ratio of closer on 2 calls were written for every 1 put. Though the PCR is holding at around that 0.88 odd mark. And there were a couple of strikes that were very active. 25,500 call. That saw a good amount of open interest build up. And on the downside, the 25,400 level, that as well did see a good amount of open interest build up, with the premium now at around 75 rupees. Just plugging this in and looking at the technical levels, I'll give you a tight trend just in the near term. The 20 DMA on the upside, that'll be a level of resistance. Remember, in the recent past, we've gone to around the 25,700, 25,717. We've done a bit of a U-turn. But if you're looking at simple moving averages, well, the 20 DMA at around 25,610 approximately, that becomes the first level of resistance. While on the downside, the 200 DMA, you don't want this mark to break. This 25,300, 25,350, you want that level to hold out. The Nifty Bank, the price action there is quite interesting. It's gone through a bit of a consolidatory phase post the big run that we have seen. Last few trading sessions, 60,800 appears to be the level which is getting bought into. So even in today's trade, I think 60,700, 60,800, that's going to be very, very important to hold out, because last few trading sessions, that dip has got bought into. The IT index, well, the recent low is important that it holds out. Salesforce, remember, overnight it was higher, though the 2027 guidance came in softish. But despite of that, you did see the stock end higher. So I think if this holds out, you'll be saying that a bit of a relief rally, a little bit more from here on, could be on the cards actually for the Nifty IT index. So let's see how that goes.
All right, thank you very much for that. Sticking with the theme, Globant, you said, right, came out with numbers. Stock was up 5%. But this is a stock which has gotten butchered, down 25% on a year-to-date basis. And Globant is seen as a proxy for many Indian IT companies like a Persistent, Coforge. So just a quick recap. Q4 numbers were fine, in line with estimates, maybe even better on the top line, which is what drove the rally. But here's the moot point. For FY25, the company's revenues grew only 1.6%. For FY26, revenue growth stands at 0.2 to 2.2%, which basically means that IT services companies, whether Indian or global, they're still struggling for growth. But Globant is making a shift. So it's shifting away from the traditional hours worked billing towards AI pods. What are AI pods? So basically, instead of hiring a team of, say, 5, 7, 8 engineers and paying for every hour that they work, instead, you're going to be paying a monthly subscription fee to access that AI pod. What is an AI pod? They're basically AI agents, and they're driven by, they're supervised by a few Globant experts, but you're basically moving towards an outcome-based model, and you are paying for AI pods. Now, these AI pods, because the company is in transition, it contributes nothing, less than 1% to the company's total average revenue as of now, but it's growing very fast. So as a percentage of the pipeline, it is about 8% of the total pipeline. So the this transition period has been painful for Globant stock, down 25% year to date. But yesterday, stock moved up close to about 5% odd. Well, that's the latest there. Let's invite Jeffrey